Let's stick with politics as debates and discussions continue over what the government might do with upcoming surpluses, whether this might include tax cuts and what the appropriate response to the housing crisis and housing unaffordability is. Gareth Morgan has today suggested a reinvention of the way we collect tax and what we collect it on. The Morgan Foundation has released a report called New Zealand Income Tax Unfair and Favours the Rich. It says making a fairer system requires closing tax loopholes that benefit the rich, and that requires, and I quote, slaying some sacred cows and disrupting long-held privileges bestowed upon a capital-owning elite. Gareth Morgan includes himself in that category. The solution, according to Dr. Morgan, is the introduction of a comprehensive capital income tax. I asked him to explain exactly what a CCIT is.
If you own capital, you get a return from it. Now, some of that form of return is taxable, like interest and dividends, that sort of thing, but a lot of it isn't. So use of the property, for example, is not taxable. Whereas what a CCIT would do is it would deem that all that capital has an income and that income should be taxed at whatever rate. Now, to put it in shorthand, John, this is how often it's referred to internationally. It's called a wealth tax. But really, the CCIT is not a wealth tax in the sense that it's not double taxing you. If you're already paying the tax on the income from that asset, then you don't pay again. So what the CCIT does is just augments the existing income tax structure. So it actually picks up that capital that is giving the owners a benefit that isn't being taxed and taxes it. And that will take out that unfairness in the tax system to the extent, I think, that we can probably get a 25% increase in income tax, which means that we can reduce tax rates on, say, PAYE proportionally by 25%.
So forgive me for cutting in here. So you're talking about a 25% increase in revenue from taxation if a CCIT is introduced, which means there can be commensurate reductions in PAYE, which is the tax most likely to be paid by people with no other forms of income, right?
That's right. And that's why I'm saying currently the income tax system is extremely unfair. And, you see a whole lot of the richest people in New Zealand who, declarable income is no higher than the sort of 70,000. So, if that's not telling you that this system can be gamed, I don't know what is.
Gareth, you refer to deliberate loopholes. Do you think the system has been drafted, created, designed to exclude precisely this kind of wealth from being taxed?
Well, I think increasingly that's the case. So, increasingly, instead of taking on the sort of uber-rich elite, what we're doing now is finding ourselves taking on the property-owning class. And even if somebody doesn't own property now, they see themselves as inheriting it from their parents, and so you're taking them on as well. So it's quite a big elite that one ends up here saying, hang on, this playing field is not fair. This is not level. And so what we will see, we're already seeing it, we'll see more of is more and more people get locked out of property ownership because it's so hard to enter when the price of property is so high.
Given how cautious governments are around tax, how do you make a CCIT politically palatable? Can you do that? Would you ever persuade, for example, a national party and a national government to introduce such a thing?
Well, I think you can, because, the longer this goes on, the longer it's distorting the allocation of capital in the economy and inhibiting growth in the economy. So it's not just an argument about fairness, it's actually an argument about efficiency of use of capital. At the margin, what do I do with my marginal money? I go and buy property with it. Well, that's not necessarily the best economic return. I'm doing it because after tax it's the best return, because I don't pay effectively tax on it. So that's actually restricting GDP growth, employment and jobs. So if you can sell this on the basis that let's make it not only fairer to people, but let's make it more efficient, then I can't see, the sort of preliminary work I've done on this, John, and we'll publish the whole thing by the end of the year, is that I think I can make 90% of people better off by this change. So
My guess is, Gareth, my guess is that you might be one of the 10%.
Yeah,
who
I
would
am.
Right.
Yeah.
Do you own
Not good.
properties? Do you own investment properties?
Yeah, well, I own properties. I wouldn't call them well. They are investment properties, but they don't. I don't tend to have tenants because, as I've said this publicly before, they tend to make the carpets
Right.
dirty.
So are you?
Yeah.
So you were land banking, and you were making profits that aren't taxed in the same way that, say, somebody who was cleaning toilets in an office on split shifts is paying tax, right?
Totally. That's completely correct. Yeah, that's right. And that's the unfairness of it. And I'll continue to do that, as will all this property owning class, as long as this tax distortion remains. So we actually need to deal to it. It's a question of, as you have alluded to, who's got the balls to actually do it. But I mean, if you can sell it to people by saying, well, we can take the revenue we gain by expanding the tax base and cut tax pro rata in terms of PAYE tax rates, then very quickly you can work out that most people actually would be better off. There's 10% roughly that will be worse off. I'll be one of those. So I'll get a far bigger tax bill than I pay now. But then I look at it in cold light of day, John, I say, well, if I've got to pay another whatever it is, $500,000, $1 million a year tax, am I going to cry about it? And the answer is no.